Okay, so good afternoon and welcome to today's introduction to advanced Fibonacci time and price analysis. Okay, and Tammy Marshall is joining me today. I did post this on the website the other day. This is what we call the Dream Team. We have we have Shannon on the left, myself in the middle, and Tammy on the right hand side. Now, the three of us are working with Elliott Wave Trader, and then Tammy and I are also doing some education at IM Academy. So, anyway, this information, obviously, if you wanted to check out the trial, they do a two-week free trial where you don't have to give a credit card or anything. But that's, just if you're interested in seeing more. But here's the basics. We're going to start with the basics, and then we're going to get a little bit more involved, and we're also going to go over some of our current setups, okay? So, a question that many people ask is why use this type of Fibonacci analysis? Well, it enables you to identify high probability, relatively low risk trade setups where the risk is clearly defined along with the targets. This works on any time frame and essentially any good market data. Now, I'm probably not going to go down to a 1-minute chart, okay? But, I'll go down to a 5-minute chart, and we always do, daily charts, 120-minute charts, 30-minute charts, anything. You can apply it to pretty much all of those. Now, I've also applied this method to stocks, ETFs, futures, and the Forex markets, and actually I need to add crypto. It also works on Bitcoin and Ethereum. It's an excellent methodology to use option strategies with, okay? And also with this work, you can see things in the market that you will never see using indicators alone, okay? So keep that in mind. So again, just the basics. If you're not familiar with the Fibonacci number series, it's basically taking the prior two numbers in the beginning of the series and adding them to get the next number. So like 13 plus 21 is 34, 34 plus 55 is 89, and so on. So the number series continues to infinity by adding the previous two numbers. Okay, but we're not actually using the Fibonacci numbers. We're going to be using the ratios derived from the Fibonacci number series. Okay, so the ratios derived from the series that we use every single day: 382, 50%, 618, 786, 100%, 1.272, and 1.618. Now for confirming ratios, or if I have a very, very large swing, I may use 236 as a retracement. I also use the 2618 as my third target for any trend trade setup. And every once in a while, if the market is a runaway, what I'm doing there is I am going to be, actually, let's lower that, use a 4236. Okay, that's just if the market's a runaway, and sometimes you'll see potential support or resistance there. So I can tell you that 618 came from in between the numbers, okay? Basically, let me see if I have that other, actually I don't have that other slide, but basically 618 is inside of the number series. For example, if you take 34 and multiply it by 1618, you're going to get 55. Same thing for the rest of these numbers. So that's where the main ratio comes from inside the number series, okay? Again, you can just try it on your calculators. 13 times 1618, you're going to get roughly 21. But where do the other ratios come from? So the other ratios that we use, well, 1 minus 618 is 382. 1 divided by 2 is 50%. The square root of 618 is 786. 1618 is the expansion of 618. Square root of 1618 is 1272. 618 minus 382 gives you 236. So they're all mathematically related, and this is what we actually apply to the markets every single day. So again, I'm going to go over a little bit of the basics, like Fibonacci price retracements. And again, for possible support, we're going to run low to high swings using the ratios below. So we'll run a low to a high on the chart and run these retracements: 382, 50%, 618, and 786. Again, sometimes I will use 236. For possible resistance, you're just going to run the prior high to low swings using the same ratios. Okay, so that's retracements. Now an example. This is an example of a retracement. This is on a daily chart of Square, where I've taken a prior low to high swing, ran the retracements, and again, you're not always going to see something hit. We don't know if a single level is going to hit. But in this example, I'm just showing you, one retracement of one swing. But in this case, we didn't really see much. We saw maybe a stall at the 382. Nothing happened at the 50%. But right around the area of the 618 retracement, we ended up seeing a healthy reversal off of that area. Okay. But a little bit later, we'll get into, how do we know which levels to use. Okay, this next example, this is actually a 30-minute chart in AMAT. It's where I took a prior high to low swing, again, ran the ratios. Nothing here. At the 382 retracement, we did end up seeing a little bit of a pullback off of that. Not really anything at the 50%, but again, at 618, 58.40, you saw a healthy reversal after that was hit. So again, we always watch these areas for potential support or resistance. Now, the second type of price relationship that we use every day beyond the retracements is what I like to call Fibonacci price extensions. Now, for me, extensions are essentially retracements beyond 100%. You're still using 2 points on the chart. It's where you're going to measure a prior low to high swing and extend it downwards, using 1272 and 1618 for possible support. So actually, in most programs, you're going to use the same tool that you use for retracements to run the extensions because it's coming from 2 points. If I want to look for possible resistance, I'll measure prior highs to lows and extend using 1272 and 1618 and look for possible resistance. So here's a couple of examples. This first one is in Facebook. Now this is a daily chart of Facebook, and actually there's more than one example here. Here's a prior high to low, ran the extensions. You'll see that you came off of these extensions twice, that 1272. Nothing really happened at the 1618. But also another high to low swing we ran. Now you didn't really see much of a reaction off of the 1272 extension, but you did see a high put in pretty much right on top of the 1618 extension. So again, we always look for possible support or possible resistance. In this case, we were looking for possible resistance, and that should be helpful. This next example is in Intel stock. Okay, so this is a daily chart. I measured a prior high to low swing. 1272, really didn't see any reaction. 1618, we ended up putting in a high. And actually in this case, this was to the tick. 5085 was the 1618 extension, and 5085 ended up being the actual high before it dropped, looks like $5.80. Okay, now don't worry if it doesn't make sense yet. It's just going to take a little while to put this all together. So here's another example of a price extension, but this happened to be on a weekly chart because it's an old example, but it was when, this stock chart was going straight down. And I wanted to know when we might find support. Now, price extensions, again, I say is where moves tend to terminate. You've seen that in a couple of examples. Well, here I ran the low to the high. And again, you didn't really see much of a reaction off of the 1272. But the 1618, it came in at 262.71. Actual low was made at 263 even. Okay, so not a perfect hit, but still very, very close. And we ended up seeing an initial rally. It doesn't look like much, but it's a weekly chart, and the initial rally was $82.88. All right, so that's it for the extension examples. The third, Okay, somebody needs to shut their mic, please. Or I'll have to see how, oh, here, I'll do mute all. Here we go. Okay, now we should knock that idiot off. As far as Fibonacci price projections, this is where we use 3 points to run potential support or resistance. Here we're taking a prior low to high swing, and then we're projecting from another low for possible resistance. Now I'm always using 100% for something that we call symmetry. Now Tammy is here. She's going to go over symmetry examples for you so you get a better idea of what we're talking about with symmetry. And then sometimes 1618. If we go beyond 100%, then there's some cases where I will use the 1618 projection. Okay, so low to high from a low for possible resistance, and high to low from another high for possible support. So an example of a price projection, this is where we used 100%. Okay, and let's see. Tammy, you are a co-host, so you might be able to just delete that one person. As far as this crude chart, daily crude. Okay, Lloyd, you need to get the hell out of here. Okay, let me get rid of it. Okay. All right, any guy named Lloyd, just get rid of him. Anyway, as far as this crude oil chart, we basically have a prior high to low that was $3.12. Okay, I projected 100% of that from this high. All right, that gave us 55.87. Well, the actual low was made at 55.88. Note that this high to low was $3.12. This high to low ended up being $3.11. This ended up holding as support. It hit, it held, it would have triggered an entry, and you can see there was a very, very healthy rally off of that one projection. Okay, another example of a projection. This is on a 60-minute chart in Google. As far as the prior, whoops, let me go back one. We took a prior low to high swing, and in this case I did both. I did run the 100% projection, but we didn't see any resistance there. We blew right through it. And then the 1618 projection actually capped this move. Okay, 1097.88, actual high was 1097.51. Close enough. All right, another example of, what we like to call symmetry. Symmetry is basically comparing swings in the same direction using the 100% projection tool, because many swings tend to be similar to other swings on the same chart. Okay, so you can see here, this was a 30-minute chart in S&P futures, and we had a rally of 91 points from the low to the high. Okay, I projected that 100% from this low here to look for possible resistance. It gave us 30.97 as the 100% projection. And you can see that these swings were almost equal. They're very similar, 91 points and 90.25 points. Okay, so since we failed to clear resistance and there would have been sell triggers, again, that's your trade. This defines your risk. You know when you're wrong. It's not like when you use another method and you say, well, maybe this is going to happen or it'll come back. No, you're wrong if it goes through the zone. Okay, so it's kind of like built-in discipline if you use it correctly. Now, a very powerful trade setup that I use and Tammy uses and Shannon uses is called a Fibonacci price cluster. Now, the definition is the coincidence of at least 3 Fibonacci price relationships that come together within a relatively tight range. So this is going to be an example of a cluster. Okay, so we're starting in, this is an example in Facebook, and I'm just showing you each step. So what I found at that time that I was looking for trades, I ran a low to high swing and found a 786 retracement at 334.31. Okay, so that was one level. I also found a prior high to low swing that was very similar to the decline. So this was $24.75, projected 100% from that high. That gave us 334.05. Okay, so that was the second price relationship. The third price relationship came in here, where I took a prior low to high and ran the extensions. Okay, 332.72 is where a 1618 extension came in. So you put all of those together on your chart, and this is what it looks like. You know, this is a price cluster. It has three price relationships. We had a 100% projection from here. We had a, let's see, we did have a 786 retracement of a prior swing, and okay, the 100%, oh, and also this 1618 extension, low to high. So the cluster was 332.72 to 334.31. And then this is the result. You had everything come together. The zone hit and held, and it would have triggered. Okay, the way that we teach triggers, I do have some free videos on YouTube that I think some of you have watched that will show you, how we use triggers. But it triggered. The initial risk would have been defined as either underneath the low made prior to the buy trigger or underneath the low end of the zone. Now, typically I would put it underneath the zone because that kind of gives you more than one chance for the trade. But again, it's your choice. Either one is fine. But that's a cluster. And note that in this case, we met two targets on the upside. Okay, my targets for trend trade setups are the 1272 extension is the first one, the 1618 is the second, and 2618 is the third. Okay, it's going to be different for counter trend trades. Now, beyond that, here's an example of a trigger. So in Facebook, this is a 15-minute chart. This is the more aggressive swing trade trigger that we use. But here is where we tested the zone that I just showed you on those daily charts. Okay, here's where we took out a prior swing high. And then here's where you had the 834 EMA crossover to the upside. So pretty much you would have been long right around here. Okay, and your risk would have been just under here. But that's how we put that together. So the way that we make money, in the trading room is setup plus trigger equals trade entry, and then you manage it. But one of the things that you want to remember is that, the trend trades are going to be the higher probability setups. So if you are new, you definitely want to stick with the trend trades. Okay, here's another example. This was off a daily chart in NASDAQ futures. Now, you can use daily levels for day trade decisions. So we had the first area of resistance that stood out was 112.54 to 112.56. Now, it included a 618 retracement, I believe, of this prior high to low swing, and then also a 100% projection. So we knew that there was resistance here via the daily work, and actually the daily chart was in a bearish mode. This is lower lows and lower highs. An example of a simple trigger, again, this would have been using a 1-minute chart trigger here. Okay, here we took out a prior swing low. Here we had the 834 EMA crossover to the downside. So once both of those things occurred, that's your signal. You can get short and risk just above this prior high. Okay, and it's not going to be huge. If you're using the day trade parameters, the risk is going to be relatively low. I mean, obviously, if you're trading too much of your account, then you can get in trouble. But AMD, I'm going to give you a couple more examples before I get into the more recent. So this is an AMD chart where I took a prior high to low, found a 382 retracement. I took another high to low retracement. We had a 618 here. And then we also had a projection, prior low to high, which was $33.61, projected from this low. Okay. And that gave us a cluster of 104.12 to 105.21. with a 100% projection, a 618 retracement, and a 382 retracement. And from there, it held, it would have triggered, and there was a decline of $50.02 from that cluster. Okay, another example, this is SMH, the ETF, semiconductors, right? And then we have another symmetry projection, low to high, projected from the low, a retracement, high to low, 618, another retracement from the lower high, 786. So you had a cluster at 204.18 to 205.95. And initial decline was $37.74. I'll take questions after Tammy's finished, okay? Okay, another example, this was in gold futures. This is where you had some very similar swings here, like this high to this low was 204.70, projected it from here. It gave us a projection 100%. It shows up in red. And we also had a 2618 extension of a minor swing. And let's see, we had the 100%. There was also a 1272 extension, low to high, extended. This was where the 2618 came in. Okay, so we had a zone from 1670 to 1622.60. Actual low was made at 1622.20, and that was a rally of $116.50. All right, so this is more recent. This actually is from today. So here, top end of the zone here, again, we're using symmetry. We've been in a very powerful uptrend in the S&P futures recently. So what we had here is, let's see, I'm stopping the video there. The top cluster, 43.88 to 43.95, and it only came from, at least this one, taking prior high to low swings and projecting them from the recent high. Gave us a zone to watch for a possible resumption of the rally. Okay, so far we've seen, from whatever rally we've seen from today's low, let me see if I can look that up real quick. 33 and a quarter S&P points from this low today. And the potential target, which you have to remember, is that if we continue to hold above here, the potential upside target's 45.21. All right, here's NASDAQ cash. Now, I use NASDAQ cash and S&P cash for timing. Now, one of the things, I check, like within this uptrend, is this swing or pullback similar to some of these prior pullbacks? And notice that most of them were 2 to 3 trading bars down as far as, pretty shallow pullbacks before the market resumed the rally. Now we had that, okay, the time symmetry, but we also had some outright cycles on June 21st. So we always look at the cycles plus or minus a day for possible market turns, okay, which is something that not a whole lot of people use. We also do this on the 120-minute charts in the trading room during the day. So know that this timing was telling us to watch for a possible low right around these dates of the 21st through the 23rd. Well, let's see. Whoops. Let's go back to that one. Oh, yeah, I can't label this yet. Well, this was an example in SMH. Okay, SMH 146.60 to 147.93. It is a current setup. We are on top of the support right here, right now. We also have the fact that this is a bullish chart, pattern of higher highs and higher lows. We're above the 200 simple moving average. We're above the 50 simple moving average, and the 513 EMA combo is in a buy mode. So, we want to buy pullbacks until it doesn't work anymore. So if this zone holds, like I said, this is a current setup, potential upside target's 158.11. Second target would be 160.88. Third target, if it went there, would be 168.87. Typically, we have people ratchet up stops when you get up to these extensions, because many moves do tend to terminate at extensions of prior swings. Now, I thought I had okay, Oh, here it is. So here's the NASDAQ futures. So in NASDAQ futures, we had a cluster at 149.39 to 70. You know, it looks like there was a couple of symmetry projections plus a 50% retracement there. It hit, it held this morning. Okay? Again, you could have taken a 1-minute trigger or a 5-minute trigger because so far we've seen a rally of 217 NASDAQ points, and we still have the potential to rally towards 156.14, 157.91. Okay, and I think this might be the last one that I'm going to go over, and then I'm going to hand it over to Tammy. So here, in the IWM, we do have currently a 618 retracement that overlaps a 100% projection that overlaps a 1618 extension. So this is a cluster, 182.08 to 182.79, or actually 57 area. I guess I have to edit that. And the potential upside target, I mean, you can see we've seen a little bit of a rally here, but the upside target, if we continue to hold above this low, would be at 191.08. Okay? So I think that's pretty much, oh, I had one other, this I'm just going to say that this is a counter trend setup. Okay? So when we traded into this cluster at 94.05 to 95.30 in win stock, okay, we had things working against us. We had the fact that you were below the 50 simple moving average and that the 513 was in a sell mode. Now it still ended up working, but I'm going to tell you again, if you are new and if you're not already successful, you know, taking trend trades, do not even bother with the counter trend trades. Okay. So with that being said, Tammy, I will give up the screen here and you can take over. And then I will come back and answer questions after you're done.
Let me get switched over here, and I know you're going to be surprised to know that I am from South Georgia, but I do sometimes leave some work, y'all. Let me go ahead and share my screen here. Let's see. That is the one. Can y'all see the NASDAQ 120? I just want to make sure that I've got, whoops. Just want to make sure that I have got the right screen showing here. Yes, you can. Okay, great. All right, so today, this is a trade setup from this morning. All right, I had this set up this morning live. We have live charts at Elliott Wave Trader. We share 8 of them. 4 of them are ES and NQ. There's an ES 120 and an NQ 120, and an ES 10 and 10 minute, and an NQ 10 minute. This was on the NQ 10-minute chart. I had timing for a low represented. Okay, so any of the pink bars at the bottom can hit, but I highlighted the highest probability one because it is the longest pink bar at the bottom. If you're looking down here at the bottom, okay, I highlighted that with a gray line. Coming into a cluster of support. What's a cluster? 3 or more Fibonacci price relationships that come together. All right, so your setup zone is 14,938 to 68. It's only 30 points wide. That's really not a wide zone on NASDAQ, a wide zone of risk. And you can see the next zone of risk was not until much further down. So what would you do if you were trading this? You would just put your stop just below this cluster. And you know, if you trade in Q, you know you want to give it probably 15, 20 points worth of wiggle room underneath that stop. Underneath that setup zone. But, this is called defined risk. It is beautiful. Okay, put your stop. You've got timing for a low, Fibonacci timing come together with your cluster. We hit, held, and how much of a rally have we had now? Let's see, that is 238, 64, that's 36. But 200, almost like over 300 and something points in the NASDAQ, right? Okay, that's how much of a rally we have had this morning this today from a setup I gave this morning that really did not have a lot of risk. Oh, I'm sorry, let's see, 14,964, I wanna make sure I get this right. It's the end of the day. So, wanna make sure I got these numbers right for y'all. 14,964, yeah. That is just a ginormous rally there. 274 point rally on NASDAQ there, okay? And if you're trading futures, wow, what a bounce, right? So that was a setup that I had for you live this morning in our room. As far as ES 120, same exact story, about the same time. I had timing for a low. The larger bar was within one bar of where we actually bounced, okay? So held symmetrical support at 43.93. It held nice rally up. Let's see, now we're up to 44.27, right into my resistance, right? So 34-point rally there in ES. That is a nice rally. And now what would you want to do if you had decided to get into this trade? You would want to trail up your stops into this resistance, right? What I mean by trail up your stops is if your stop was underneath this setup zone, as you move up, okay, you want to move that stop up in order to lock in profit. So as the move moves up, you move up that stop, okay, moves up again, you move up that stop. So now your stop would be just underneath here to make sure that if this resistance causes us to make a deeper downside correction or retest the low from the day, you are locking in profit. Let me see a couple of more examples I've got here for you here. This is Amazon. Now, Amazon has been up, and away, right? This second target you're looking at is actually still from this larger swing back here. We met the first target, the larger swing second target we're still looking for. That's that 1618 that we have met today. But guess what we do along the way up? We continue to set up those pullbacks inside this swing. Meet the targets, set it up again, meet the targets, set it up again, meet the targets, set it up again. So what do we do here? We set it up again, okay? And today we met the first target off of that swing. So this was the high to low right there. Then inside of that swing, we had another swing, which was this one, which is 618 from low to high came together with some symmetry from this to here to make us a pullback at 123. So the people that were in the room live, you know what I said? If you're already bullish Amazon, guess what? This setup at 123 is a great place for you to add contracts if you're still feeling good about your trade. Okay, so we met the first target off of that one. Now we've met the first target off of this one. So what can we do now? We can delete these. We've met that one. And now we're just looking for the second targets off of these more recent swings. And guess what we're going to keep doing? Even though it's super extended, when we pull back again, we're going to set it up again. You know why? Because all the moving averages are on the side of the bulls, and we're going to keep setting it up until it doesn't work anymore. Right? This was a chart request this week. On Mondays and Wednesdays, I do chart requests. What that means in the Elliott Wave Trader room, if you post in the post that I make on Elliott Wave Trader and you say, this is the chart that I would like you to run for me, please, I run that chart for you. Okay, and this was a chart request this week, Sell H. I gave this client defined risk, 138.04 to 139.21. It held support. And guess what? It has taken off. Look at that nice move since they got that chart request. And look what else. Looks like it's going towards these target extensions, right? Great setup. All this person had to do is say, you know what, if this doesn't work, I'll put my stop just underneath there. And if it doesn't work, I have minimal loss, right? It bounced at 139. The bottom end of the zone is 138. Okay? Targets on the upside are 153 and 157, and we are almost there. Another great chart request that I did this week, MDB. okay? Actually, I think this one's from last week because that is where it hit and held. This is actually from last week, or maybe a couple weeks ago, June 8th. All right, it hit and held support at 364.40. Trigger to buy. All the moving averages are on the side of the bulls, so this is a royal trend bull setup. Hit, held, and we are on our way to extension targets. It did pull back, but that's okay. It pulled back, retested that zone, and so then I did add another set of targets here off of that smaller swing inside the swing, and that is what it's pulling from right now. Pulling back from right now is just that first little target. I would be willing to bet, if I had to on this stock, that this will pull back to one of these retracements and continue to move up to these higher swing targets. All right, everybody, that's all I've got for you for now. Carolyn, you can pop back in, but if you have any more questions, we are more than happy to answer them for you.
Okay, let's see. I've got to get the chat back up so I see if there's any questions. All right. Anyway, are there any questions on anything that we did just go over? Just wanted to give you a little bit about the basics and all that. But if you want to watch it in action, obviously you can do the 2-week trial. That's free, and you don't even have to give a credit card. So your choice. Okay. Also, I did leave off the work that I actually do on Fibonacci timing, but I think I may do that presentation another time. Yeah, and if you need the triggers, like I said, I do have some videos under my name on YouTube, and you can also, if you want what I usually send out to my new traders, if you need that document, I'll just give you my email real quick, and you can email me, and I can send it back to you if interested. All right, well, I guess then that kind of wraps it up. Thanks for joining, and if you come up with any other questions, feel free to, oh wait, here's one. 513 versus, okay, I do different averages on my daily charts versus my intraday charts. My intraday charts, I'm using 834 for the most part. If you wanted a more aggressive trigger, you could use the 513, but I'm using pretty much the 834 on all the intraday charts, unless you set one aside that's separate. And then on the daily charts, I use the 200 simple, I use the 50 simple, and then I use the 513 EMA combo. Okay, so it's just different for different time frames. The dynamic trader software doesn't automatically give us the timing signals. Basically, I have to run the cycles either outright by measuring the prior highs to highs and lows to lows and all that good stuff. But there is also a histogram that is inside Dynamic Trader that if you pick the swings that you want to use and you tell it what swings to use, then we can basically then click the button and it will run all the time relationships. Okay, so it's not exactly automatic. You have to pick the swings and go from there. I'm not sure about the WD GAN stuff. I just know that I've been doing this work since, let's see, I probably really started after the crash of 87. It might have been 89, the beginning of 89. The book has a chapter on everything. Okay, so there's, chapter on retracements, extensions, projections, goes over trading plan a little bit, but, I have a trading plan that I've updated since I wrote the book. But I would say that the book goes into more detail, but if anybody else that's read the book can agree with that or not, just let me know. but there is a chapter on everything. Now, it does take practice. Basically, you can go back to some of my old examples on the site, and you can go back and see if you can, calculate the same levels. If you come up with the same levels, then you're pretty much doing it right. It's like I can't really check everybody's charts that, does a chart, but if you check them against mine, then you're doing it pretty well. Okay. All right, cool. On a retest of a 618 to the upside. I'm not sure what you mean by use the previous fib. Or you mean use the 618 again? The odds will be lesser that it's going to hold on a retest, is what I say. Now, sometimes it does hold, okay? You'll definitely see examples where something tested a zone for a while and it's still held. Okay, but I'm saying that each time it tests a zone, the odds are lessened. Okay, yeah, I'd have to... Actually, I haven't looked at a copper chart in quite a while. Okay, any other questions? Oh yeah, and also we do, I guess Mondays and Wednesdays are the days that we do requests. All right, well, thanks for joining us. I hope that gives you a little bit of a better idea of, what we're doing here sitting behind our desks during the day. And if you have any questions, then feel free to email me. I gave you that. I'll just give it to you one more time. And of course, we're on Twitter. All right, well, thanks for joining.